What's up, people? Welcome to this episode of the Buy the Hood podcast or webcast because I don't know how you're consuming this content. I'm your host as always. My name is Jimmy. And as we start every show, that's with gratitude. Just want to say thank you to all of our supporters, anyone who supports anything that we do, specifically all the students from Buy the Hood University, as well as the youth from the Buy the Hood Ownership Camp. Now, update on our camp. Our camp is still going on. It starts the end of June, and that's free for all the youth ages 5 and up all across the country, or the world for that matter. Go to buythehoodcamp.com and the link will be in the description to sign up for our free finance camp for the youth. In terms of our gala, we were supposed to have our gala to support the camp on the 18th. We're actually going to postpone that because we're going to do it bigger and better. Remember, we have a DJ, free food, all that. So we're actually going to ramp it up even better. You know, we have corporate sponsors that are, want to come up, be a part of what we're doing in the Buy the Hood Ownership Camp. So it'll probably take place this fall. It's black tie. Everything is to support our camp. But the camp starts at the end of June. So for the parents out there, make sure to register your kid, buythehoodcamp.com. And, we'll have the link in the description as well. But I'm joined by my partner in crime as always, Core. Core, what's up with you, good brother?
What it is, though, every day above ground is a good day. So let's go get it.
Absolutely. Listen, and our show is designed to highlight brothers and sisters who are doing positive work in the community, putting out positive energy, building businesses, just, showing that we have a lot of people who are doing good work. And this brother that I have with us now is into venture capital, which is very interesting. We're going to talk about that and talk about our role in that space. But without further ado, I'd like to introduce the good brother, Pedro Moore. Pedro, how are you, good brother?
I'm well. How are you both doing, Jimmy and Corey? How are you guys making out?
Man. Oh, man. Can't complain, man. We here.
That's
right?
Awesome.
Yeah, man.
Yes.
But we
thank you guys for having me on here.
Oh, yeah, absolutely.
Oh, thank you for coming through.
Yeah, but we want to highlight you. We want to talk about the work you're doing because the space that you're in is very interesting. We always, hear stories about how it's not enough of us in that space. But before we start to talk about that, let's talk about your background and how you got to where you are. So where are you from? Where are you born and raised?
Absolutely. So Delaware, born and raised in Delaware. And in terms of how I got to where I am today, I'm going to first start off is regarding relationships. I went to University of Delaware. I made a little history there where I founded the entrepreneurship club, student-ran organization. A lesson I learned from Diddy back in the day. He always talked about make history. So I was like, you know what? What's better than being a president of a student club? How about you being a founder of one? So by doing that, I founded the entrepreneurship club, which is still in existence to today. And then I ended up building relationships with a venture capitalist and a few others that helped me catapult my career into venture capital.
Okay, so let me ask you this though. What part of, first of all, what part of Delaware are you from? And then what kind of student were you coming up before you got to the university?
Sure. I currently live out of Middletown, Delaware, but I was initially raised out of Newcastle, and then I moved around a little bit, and then I ended up settling in Middletown. But the type of student I was one of those hardworking students where I did get good grades, but I had to earn them, because there's some kids who could just not pay attention and just ace things. So I was the type of kid that had to stay up really late to kind of study and learn and all that type of stuff. But I was also that same kid that was selling you candy around the corner, So I was that student because I know every school has one, but I was that student who sold you music, sold you candy, sold you something of value in order to kind of get a job. Because I also played sports all year round, so I could not get a part-time job because I just didn't have the time for it. But I still wanted to make money. So the only way to do that was to be an entrepreneur.
Absolutely. So that's interesting, right? Because you talk about the students that don't have to study and all that. That was Corey in high school. So me and Corey went to high school. That was Corey. I don't think in 4 years of high school I ever seen Corey in a class, but he always got good grades. but then he was one of those guys. So no, I wasn't that guy either. But I did.
Yeah,
have a lot of
we hate people like Corey.
Sorry. But what's interesting though, I can relate to like having something for sale. What are the biggest products I had in high school? I used to sell locker mirrors because I realized everybody was vain. So I used to make custom locker mirrors with their name on it, and that was one of my big hits. But that entrepreneurial spirit, in terms of being a hustler at that age, was that something that came from your household, or was it just like something innate in you? Did you see like your parent or someone have that?
No, I did not see my parents. My parents are the opposite of that. They actually were against that. But I think, to answer your question, I think it stems from my grandfather, My
Okay.
grandfather is a great role model for me, even from in terms of family. I always want a big family because of him. He's been married. He passed away some years ago, but he's been a huge impact or influence on my life. So he used to have a farm with like a whole bunch of garden, a large garden. So he lived out in the country, out in North Carolina. So what would happen was that every so often I'll go down when I go down to visit. He'll take me out to his garden. We'll pick watermelon. We'll pick cantaloupe. We'll pick okra, whatever it is, and gather all that, and we'll sell it to the local grocery store down there, or
Okay.
sell it to the actual community. And so and he even have a pecan tree where I used to pick up that and all that and sell it to the local community in that area down there. And that was my first taste of commerce because it told me I don't have to rely on my mom for bubblegum money anymore. You know what I mean? I was able to make my own. I mean, I didn't make much. You know what I mean? What, maybe $5 or $2 or whatever. But I had my own cash, and I didn't have to go ask mom for it. And that right there, I think that's where the spark came from.
Got you. Shout out to all the grandparents out there because
Right.
Yeah. they're very important. So shout out to all the grandparents. So now you found the entrepreneur. So I guess a step back from that. When you went to college, where's your major, business or something of that nature?
Funny, I'm in the world of finance, vesting in finance, but no, I studied business. I studied marketing and management, but I only took like one course in finance. And then I even got a C in that class because I kind of
What was your major?
So it was marketing and management. I was a double major. I majored in marketing and management. And so I took like an intro class to like finance, but I struggled with it and I barely got a C. And here I am today, financing companies, the irony of all that.
Yeah, how about that? That's amazing. So what was the journey like after the college experience?
Sure. So, and also too, I want to preface this too. I didn't know what venture was when I was in college. I didn't even know. I knew I love entrepreneurship. I knew I like small business, and so kind of post college, what happened was those relationships I built with that club. There was a Jewish VC guy. I built a good relationship with him. Also, that's how I was able to land Daymond John as a client too, because I built two relationships at that time, and I cultivated them over years. So post college, I did not get into venture right away. Still didn't know what that world was. I worked as a manager in Walmart, some other little jobs or whatever, and I even co-founded during that time too. I did make some more history. I co-founded the first co-working space in the state of Delaware back then as well. And because prior to that, there was no such thing of a co-working space in the state of Delaware. So fast forwarding, there was an opening at that Jewish VC's firm. Mm-hmm. And he remembered me, and because of the work I did back in college, he remembered me and knew I was a good hustler, and so he was willing to take a chance on me. And so that's where I began my journey in venture at that point.
Okay, so that's very interesting. So this idea of cultivating relationships, right? Is this something that you were cognizant of, or something that you learned along your journey, or did you already understand I have to build and manage these relationships?
Unfortunately, no. I'm just a person who likes people. So I think it came a little bit naturally to me growing up with people around my neighborhood. I was just always that glue who connected people. And so it came naturally. Now, I wish someone would have told me to focus on relationships. That's one thing I tell students today. Get good grades and build relationships when you're in college. Do those two things because you can't build relationships without good grades. Anybody going to help you. But no one really told me, and I just kind of guess I just had a knack for it. But I wish someone did tell me because I would have been more aggressive with it. You know what I mean? But no, I just had a knack for it, and I just like meeting new people, and I just had a thirst because I did invest in stocks. Oh, here's another thing. I did invest in stocks. My dad got me into stocks, but I always had this curiosity, like because stocks are always around $50, $100 a share. But I was like, how can you invest before it's $100 a share? You know what I mean? I didn't know the answer to it. Mm-hmm. Now, some years later, I found out it's venture. That's where it comes from. But that curiosity just kept on driving me to learn more and connect to the right people.
Yeah. And I'm glad you said that, because for anybody watching that, maybe younger or in college, really focus on those relationships. That's important.
Yes.
Yes. That's very important.
Harvard, that's the reason why a lot of people are successful out of Harvard. It's not so much of the education. You don't never hear anybody talk about, oh, we learned so much from Harvard. No, it's you never hear that. You hear, oh yeah, my roommate is now the CEO of such and such company, and he backed my startup. That's what you hear. You never hear, oh, we had such a great time in class. You never hear that
at
It's
all.
about the relationship.
At
Every
all.
time.
Yeah, man, it's funny because I know people that graduated from Harvard, and you would think that they're not the brightest people, the people I know,
Mhm.
but they got a Rolodex that
Yeah,
they could pick up and make some phone calls, so they don't have to be the
yeah,
brightest person.
absolutely.
You know what
Yeah,
I mean?
absolutely,
Yeah.
absolutely.
So that's interesting. It's very important to build those relationships all throughout life and to cultivate them and invest in them, because one of the things, Corey, and I like to say is and relationships themselves are an asset class. You know,
Oh,
people want to talk about
absolutely.
stocks and real estate and all this, but relationships are themselves an asset class, and you got to invest in
And they pay the
I,
highest ROI.
them. That's
yeah,
true.
absolutely. I always take. I share this with my friends. Good relationships allow you to skip the line in life.
Mm-hmm.
You know what I mean? You're able to skip a line. Normally you have a barrier in front of you because of whatever it is. But if you actually knew somebody else, the owner or the decision maker, you can go right beyond that person and get in front because of that relationship.
Yeah, yeah.
It allows you to skip the line.
So you built those relationships, and you started the club in school, and you said you had various jobs. So how did you go from, say, a manager at Walmart to now into now you explained
The
kind of how
world
you got a
venture.
job at the gentleman's
Sure,
market.
sure.
How What
So
was that
so
like when you got
okay.
that job to move to where you are now?
Sure. So when the job opening happened, I applied, and so at the time, I didn't really have a formal role of like investing. It was just more of like, hey, I just need you to hang around me, kind of be his assistant, if you will, right? And the good part about that, like, I'm around him all the time. I'm in the boardroom. I'm in the wherever, just taking notes. I'm being a sponge, and so that's how it began. Because even at that time, I had to figure out like what is the world of venture. I was clueless to that, and so I had to take time to read books to familiarize myself with things. And then the nice part too was that he always took me along the ride to somewhere else. So if he go to a networking event, he'll take me along the ride. So kind of speeding up, I had to learn quickly. And so then I end up start helping with due diligence. That's one of the beginning parts of doing. You guys into real estate, you guys know how it is in real estate. It's the same thing in investing in companies. Is you learn a lot when you pull back the curtain, right? And so it becomes that. So then after that is actually helping find companies to actually get into. Then after that is also now you're in the boardroom with those companies and the board members. And so it didn't all happen right away. It
Hmm.
just built up over time. So in the beginning, I was more of his assistant,
Gotcha.
up under him, learning everything I can. Then it became more of a like, hey, Paige, I need you to do this. So then when I'll give you a little bit tidbit of how even the relationship built with Daymond John. So back then, Daymond before Shark Tank, Daymond we all know was from Fubu, and the gentleman by the name, his name is David Freshman. He out in this Philly Midland area, he always put on a lot of venture conferences. So he always brought Daymond John in as a guest speaker.
Hmm.
And so those were some of when I was in college, those were some of the events that I would help David out in. And so that was good introduction for me. And so then uh, some years passed, Daymond got on Shark Tank. And then David, because he already had a pre-existing relationship, created a partnership agreement with him and Daymond. And so then from there, it was, we helped perform a lot of due diligence and help Daymond out. So because uh, people always going to say that everything's amazing, right? You know what I
Yeah.
mean? And so we are there to kind of help with that process before Daymond actually moves forward with any of the deals. And so that's where I ended up assisting David with, and then eventually became me doing a lot of it. And then unfortunately he did pass away some years ago. So then I am doing all of it. And then we end up closing down the firm, and then I just end up taking the contract myself. So
Okay.
that's kind of like how it all happened. But it all started off with the relationships that started over 15 years ago.
Yeah, that's what I was going to say. That all started from a relationship as well.
Yeah, when I
Man.
was in college, like I didn't know any of this was going to happen. You know what I mean? And actually, there was a chance I thought somebody was going to hook me up. I don't know if you guys remember. Fubu had a record company back in
Absolutely,
the
I
day.
remember that.
Yeah, you remember that? And
Yeah.
so I had a guy in college tell me he was going to get me to be an intern there, and it ain't never happened. So I was salty about that. But it's great to see it work full circle in this capacity where I'm able to. I mean, I do the same thing with other investors as well. But Daymond is one of my best people to work with.
No,
Him
that's
and his
amazing.
team.
But that also goes to being a good person too, right? Because
Yeah.
when people, you don't want to quote the notorious Big, you don't want your name to taste like ass when you speak it, right? So when someone speaks your name in a room, there's a
Yeah,
certain
man.
energy that comes with it, right? Because if
Yep.
you were an
Yeah.
a-hole in college, when it came that time, he wouldn't even thought of you, right?
Yeah.
So treating
Yeah.
people well, that's another lesson. I like to take
Man.
lessons when we talk to people, but treating people well pays a long-term dividend because I see Corey shaking his head. What you about to say, Corey?
Yeah, because it don't cost nothing to be nice. It doesn't
Yeah, I was about
cost
to say,
anything. It
Yeah.
doesn't cost anything to be nice, right? Like I'm nice to people I don't like at all. But it doesn't matter if
Yeah.
I like them. It doesn't matter whether I like them
It
or
doesn't
not
matter.
because
It doesn't matter.
nice is
Right.
my default. Now,
Got you.
Yeah. I
you've
like
seen
that.
you've seen me be other than nice,
Yeah, I
but the
got you.
thing is, I always start. My default is nice.
Mm-hmm.
You know what I mean?
Yes.
Because
Yes.
I don't know people. I don't know what they go through. I don't have any idea of the struggles they may be having at that particular point. So I always default to nice when I start. You know what I mean?
Yeah.
And so
Yes.
when you
Yes.
build in relationships, you know what I mean? A lot of people will call me a lot of things and they'll say a lot of things about me. But the one thing they won't say is in our first interaction that I was rude or disrespectful or whatever. Now, over time, they may say that, but in our first interactions, it'll never start that way.
Yeah, but that's one of the lessons I'm taking from Pedro's story because a lot of people put you in position, but it's based upon their opinion of you as a person, right?
You're absolutely right. And to add on to that, I have contacts to high profile people, very financially successful, savvy people, and I can call them up and get insight. You know what I mean? I don't even have to pay for it. There's one guy in particular who used to be an old portfolio company, sold his company for like multiple millions, and I can, call him up and get him feedback on a deal or something, and he'll sit down and talk to me. You know what I mean? With no problem at all, And so that's the benefit of those relationships because you can, because when you for example, like I am working on trying to create a new venture fund, and so sometimes you don't want to always have to pay someone to get insight. So sometimes you want to just be able to pick someone's brain.
Mm-hmm.
And so I leverage those relationships to say, look, man, you've done something similar to this. What do you think about this? What do you think about that? And it allows you to get real seasoned insight from someone that has the deep expertise.
Yeah.
And so it's a beautiful thing because it allows you to get connections to wherever you want to go.
Yeah, and some people will have to pay a lot of money for those consultations, right? It's like you're almost getting consultants on your team,
Yeah.
So my next question to you is for someone that has no idea what venture capital is or what a venture capitalist does. How would you dumb it down to explain exactly what venture capitalism is?
Sure. I remember someone had a meme about, hey, explain horribly what you do. And so I made a joke. I said I take money from rich people and pour it into companies that will crash, And so, but that's just making a joke of it. But really, what happens is that what you do is venture capitalist is. We'll start with what a venture capitalist is that it's an investor. Okay. And the reason why it's a venture capitalist is because he manages other people's money. So he does have to go to rich people or institutions, and those institutions could be universities, pension funds, big corporations, very high net worth people, whatever the case may be. And they put money into a pot. And then me as the VC have to take that money out of the pot and put that money into various companies. We had to put in a lot of companies, okay? And we always use this kind of a portfolio of 10 scenario to easily explain it. So we would like to spread that money off to like 10 different companies, and we'll take a minority stake in those. And our hope is that through the capital that we provide, these companies grow and get acquired by an Apple, by a Microsoft, by a Facebook, by whoever the case may be, for a large sum of money. Because once that happens, we collect that money, give them back to our investors, who we call limited partners, LPs, but our rich people investors, and then we take a percentage that for ourselves, and that's how wealth is created.
Now, in that scenario of just using 10 as an example, what is the success rate that you look to have us?
I was about to ask the exact same question.
Yeah, so as a venture capital firm, in order for you to be successful, what percentage of those investments have to kind of, obviously you want them all to work out, but what percentage has to work out for you to run a successful firm?
Well, I'm gonna answer that two ways. So one, here's how I'm gonna answer that. The reality is, majority of them do not. A third disappear. A third, you might break even. So the reality is, you really need a third of that to do extremely well,
to pay
like a 10 times return. That's the goal. And does it always happen? No, but the goal when you go into invest, the expectation is some kind of 10 times return, because you understand that the rest of your portfolio, more than half your portfolio, is not going to really do much. So you're going to need a quarter of your portfolio to really do so well that it can pay back for the loss of the other investments, plus more, that make all your investors happy.
Got you.
So
it's like everything else.
At the end of the day, at the end, the perfect scenario is that you can tell your LP that you made 3 to 5 times return in terms of whole portfolio. When I say that, in terms of when you include the losses and all that in there, but the companies that to help you yield that return, they got to do at least a 10x type of return. So we invest at $1 per share. We need that to be sold to Apple for $10 a share.
Understood.
So that's how we make our money.
Got you. Understood. So getting into this space, what would you say was the biggest eye opener, the most shocking thing that you learned? Because you said you didn't know anything about venture capital. So once you start to learn, what was that moment like when you realized that this is how industries start?
That I was thinking about business entrepreneurship all wrong. Well, first, the exit. Our community does not think about exiting companies as compared to other communities.
Okay.
But the reality is, exiting a business, that's where the wealth is created. You build a company, a high growth company, and you sell that for a ton of money. That's where the wealth is created. And so it made me start thinking differently, because when I first started, my thinking of entrepreneurship was the soul food restaurant, the small business, the cleaning company, the contracts. But like, this was a whole different world. These people buy and sell businesses all day long. And, and the other thing is too, they grow so fast in a short period of time.
Okay.
And so that was the first thing of exiting, thinking with the end in mind. Who can buy my company at the end of the day, and for a nice multiple, so that way you can retire handsomely? So I would say that was the biggest eye opener, because prior to that, no one ever talked about building to sell. No one ever brought that up.
That's still like a hot button topic within our community, right? Because you see companies that will scale to a certain point and then sell to a bigger company. And there's always this debate in our community whether
it was good for the community.
Yeah, it's whether they sold out or not. Like no one because what you said is true. That part of the education, a lot of us don't have it, and we don't understand. Like that when people run companies, they have bills, right? Everybody likes to count everybody's money, but they don't count their expenses. And with that being said, an example would be, I remember when Carol's daughter was sold. Or when what's the company that Tristan Walker had that he sold to like P&G?
Oh,
Bevel. Bevel. It was
Bevel, yeah. Oh,
but I remember both of those times, and people were like, "Well, why didn't they scale it up and take it public as opposed to selling to the bigger entity?" But that's where that conversation about your exit comes into play. Can you speak a little bit about that? Because I know that's always a debate within the community. Like, why can't we have our own P&G as opposed to building companies to sell to the bigger company?
Well, first of all, it's very, 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 very hard and rare to go public. Number one, even white companies rarely do that. Rarely do that. So number one, so not opposed to do that. You could definitely do that, but to do that, the likelihood of that is very, very, very slim. You probably have a better chance winning a lottery. You know what I mean? Don't quote me on that part. I'm making a joke.
No,
of
but
that,
I get your point,
my
because I
point
think a
is
lot of times we don't think about just how many businesses are in the country, right?
Yeah.
There's a certain number of businesses that are on the market, but that's not a majority of businesses.
Yeah, not at all. Not even close.
Not at all. No, not at all. There's a gazillion companies today that are running $100 million. I was talking to a CEO the other day who has a manufacturing company. He's not publicly traded, and no one knows who this guy is other than probably his immediate network. But he does $250 million a year in revenue.
Man,
revenue. Okay, that's the success. He's not public. So the other thing is too, because once you go public, you have a lot more scrutiny.
you got to answer the shareholders.
You got to answer the shareholders. You don't own. So there's this pros and cons thing. So even raising venture too, you have new shareholders, your VCs, and you have a board. So and nothing wrong with that, but you do have to answer to other people. Okay. And so if you grow to a certain size and you're independent, you do have a little bit more control to yourself. Okay. So there's pros, and it's not one, I wouldn't say one is better than the other, but there is an awareness that you got to be okay with that. One, the reality of people going public is very rare, even for other communities, very rare. The more common scenario is being acquired. And that's where the wealth is at. Now, for VCs, we need companies to acquire because that's how we make our money. Yeah. You can't, in our fund lifespan is on like 10 years. So we need to invest, and we need to get you out by 5 to 7 years. Okay. But still, even if you're a company that's growing, you can hold the company for 10, 20 years. You're going to want to retire one day. And your kids, everybody always say, I want to give to your kids may not want it. That's a reality.
Yeah, man.
They may not want your stuff. I have my pastor, that's the reality. People, I know it sounds good for Instagram, but your kid may have other dreams. And how selfish would it be to force them to have your soul food restaurant when they wanted to be an engineer?
Yeah. You
know what I mean?
Point. No,
and then even in that scenario, did you even set your kid up the best way? So now he or she is in there cooking, cleaning, working, because that's a job, really. People forget, if you're a sole proprietor, you're running your day-to-day, that's still a job. Versus, it's a different scenario when you give a company to someone when they are managing it, they are overseeing it, versus I got to bake the cakes myself. That's a different dynamic. Yeah. You know what I mean? Yeah. At the end of the day, so like my pastor, he had his insurance company for a long time, making good money. But to your point about in terms of selling, he had an Allstate business, and so he sold it for several $1 million. But part of the reason why he sold it because he got tired of the changes. You know what I mean? Yeah. So what do? You going to just keep going into work not happy? You know, so the other thing too, and I'll end it with this, is that we, in terms of community, if it is, you guys are entrepreneurs, building companies is hard.
Yes.
In terms of community, where you at in terms of community in that beginning phases, right? Where you at? That's the hardest part. So why not allow someone to get their reward after their hard-earned years at the highest price? Because we buy and sell houses every day. How come we can't buy and sell businesses? It's the same thing.
No, I'm glad you said. That's why I wanted to. That's why I wanted you to go deeper on that, because I agree with you, right? Because but the thing is, I've seen this so many. I remember when Bob Johnson sold BET, and people were criticizing him for it. But in retrospect, if you look at all the jobs that he's created with the revenue, with the money he got from that, because he created 5-10 more companies, probably more than that.
Absolutely,
he's put so many people to work and put so many people in power. That is like now looking back at it, like you can't criticize him because he took that capital and did so many good things with it.
Yeah, he did.
Absolutely. And even in his wife, she got a good chunk. She owns
she's
employing
people too.
Yeah,
she's employing people.
I stayed at one of her resorts in Tampa. It was immaculate too.
Boom. Yeah, and also I want to add to another reason for selling too is liquidity, right? Mm-hmm. And then, most of small business owners or entrepreneurs, their wealth is tied up. Most of their wealth is tied up in the business. That's paper wealth. Yeah, they can't do nothing with that. They can make maybe leverage or something, but is not realized until they sell. So how dare you tell someone or shame someone for selling when you said it earlier, when they got a life going on? Maybe they got to sell because they tired, or maybe something happened to their family. They got to pay for hospital bills. You know what I mean?
Man, listen,
So there's a lot of things that
man,
are in
nobody
there.
mentions competition, right? Because sometimes a company
will
give
you
you a company will say, look, you can sell to me, or I can create a competitor for you and put you out of business. And then even if my business doesn't succeed, it will put yours out of business.
Listen, I've seen Coca-Cola do that to companies. I was watching a documentary talking about what's it called? It's a tea company where they put like a little
honest tea,
where they literally told them, either you sell to us or we're going to create a competitor and put you out of business. So the guy said, okay, cashed out for several $1 million, but listen, that's part of business too, right?
It is. And I'm gonna say one more thing. You this is your fault, Jimmy, because you sparked something. And you too, Corey. So the other thing is too, because we complain that we don't have no family and friends around to raise money to start new businesses, right? We complain about that, right? So, where do you think that money's going to come from? If we want more of that, these people have to build businesses and sell them to get the cash,
liquidity,
to eventually invest in the other businesses,
the smaller businesses that can come up.
Yep.
Yes, you need those people who, because you already mentioned Bob Johnson and his wife. You need these people to exit, to get that liquidity, to get that cash to do something else with. You can't complain about one end of the spectrum and also at the other end. You can't say like, hey, we can't tap our family and friends because we don't have no wealth. Well, but at the same time, if someone is building wealth, you cannot shame them for selling something so that way they can have that cash to do more with. There's a guy that did do that. He sold it to Unilever. I'm drawing a blank of his name, but he built a whole nother fund and invested in a lot of Black and brown women.
Yep.
Yeah.
I know you're talking about. He made
I'm drawing a blank for his name, right?
The shea butter.
Yes.
Yep. So that's a great example. Great example. That's why I wanted you to weigh in. I'm glad you weighed in on that. I have a couple other questions in terms of venture capital for the people in a minute. So outside of just capital to build the business, is there any other support that you offer a firm that you're trying to help get? You said that 10-year period. So if you invest in a firm and you're trying to get them to get to an exit, do you give them other support in terms of maybe like consultation or anything at all?
Yeah, I mean they're always available for to reach the investor. That's part of the benefit. But normally the portfolio company has a board of directors, and they're the ones that are in there discussing. And so sometimes VCs can get a board seat, sometimes they can't. So it all depends on what's negotiated. And normally you always have these quarterly meetings. That's where you get the updates. That's where you get the feedback. But the one value add, typically VCs should not, in my opinion, should not mingle that much.
Okay.
Because you're invested in the entrepreneur and you're assuming that they know what they're doing. But the one value add that you definitely can do outside of just mentorship or whatever is connections. So if you have any connections for them to raise more capital, find another customer, you can definitely do that, because that's just a connection. And going back to what we talked about earlier with relationships. So if you got somebody, you have a product that's great for Target, and the Target CEO, you connect the dots so that way Target be your portfolio company's client.
Gotcha.
So, but that's the biggest value add that a VC can provide is connections.
I'll take that.
Yeah.
All right. So, and the other question I had is, the phenomenon known as Shark Tank, right? And I know you work personally with Daymond, but how has that helped or hurt the venture capitalist business? Is it? I'm pretty sure it's probably a net positive, but are there like other negatives that come from that show being on and being the hit it is? Like, are people like running up on you, like trying to pitch to you, or how is that?
So I would say it did more good than bad, but there were some little bad things. So for example, it's a TV show in a sense that so things are a little bit different. So what I mean by that is that because of that show, sometimes people really think that I can get a deal within 30 seconds of pitching it to you in real life. You know what I mean?
Yeah.
You know what I mean?
That ain't happening.
So Yeah, so sometimes it does take a little bit of just education, like, no, sir, that might not happen today. We got to walk together. You know what I mean? Because the reality, that's a show. It's a
And there's
production.
also
So
there's a behind the scenes of Shark Tank where and I think it was like one of them, Barbara, whoever it was, said that a majority of those deals, even that close on TV, don't actually close once they start pulling back the curtain and looking at people's numbers and paperwork.
absolutely,
You know what I mean?
absolutely. That's
But again,
that's my role.
yeah,
Yeah,
yeah, but it's produced.
yeah,
So that's your role.
yeah, yeah.
When it goes good on TV, it's like, all right, send it to Pedro to vet this, right?
Yeah, basically yes, because you're 100% right. Because on TV, everything's amazing about your company, right? Everything's amazing about your company. You're not going to tell us that you had to rob a bank yesterday just to pay payroll, right? You're not going to tell us all that stuff, right? You know what I mean? It's you're gonna show everything that's amazing,
Yeah.
but
like social media.
you gotta. Yeah, exactly. Yeah, exactly, right? And so you gotta pull back behind it. You got to pull back the curtain to really look back and see what's really going on, to really assess, And so, so I'll say that's probably the downside, that I had the expectation of, like, hey, that may not happen in real life, because may not be able to get a deal just that fast, right? You might still be able to get a deal, but it may not be happen on a show just like that fast. But the other good thing I will say as a positive thing, I think it's increasing desire for entrepreneurship more. Is giving other people, because a lot of times venture is really an elite club, even though it's changing a little bit. It's an elite club. Like, that's why I was blessed to get in there, because I have an undergrad from University of Delaware. This is a regular state school. Normally, it's Ivy League, Harvard, Yale, master's degree in finance. I don't have any of that, and so to have these people to build great companies and still have a pathway to capital, as well as distribution, because you're on a national network TV, it just helps really change the path for new entrepreneurs. You know what I mean?
Okay.
So it's a great thing, and especially a lot of these people, not all of them, but some of them are just, your average Joe around the corner. And it's giving an average Joe the opportunity, or Jane, the opportunity to really do something amazing for the company. So I would say that in that case, it did more, even though there are some little bads in it, but you can't have no good without some bads. But I would say that outweighs all the bads. I'm willing to, talk someone down and say, no, that's not real, in terms of, like, you want to check today after you just told me 30 minutes ago what your company is. Yeah, I would say it does that good, because it just creates more opportunities. And one of the last thing is, it also excites more angel investors.
Got you.
Which is great for all communities, even our community. Is now saying, like, oh, I want to be like a Daymond, right? I want to invest in other startup companies as well. And so
every rapper in the world out here trying to be a VC now, and that's good.
Oh yeah,
you know what I mean?
Yeah.
That's cool, absolutely. Right? You got Nas, and Nas and Jay was the headliners, but there's been other rappers that have been VCs for a long time. Chameleonaire, and now you got
too.
Yeah, like, so there's a lot of different things that a show like Shark Tank has brought upon us, right? Because now, when they see other people succeed, it makes it more like, oh, I can put my money over there and still make money, instead of them hoarding the money and not giving it back into the. So now it's giving even more companies a chance to get their, get their product or whatever they got going off the ground. So,
exactly,
rappers and athletes taking that money and putting it back into these businesses and becoming billionaires off of a business that they didn't even build.
But
so,
with that being said, though, Core, I'm pretty sure, Pedro, you're still like a minority in these rooms. Anytime you go in a room, there's probably not too many people that look like you within this space. So I guess the question I have is, what are some of the things that we can do, or that you're already doing, or something that we can do to get people interested, and the youth specifically interested or understanding what venture capital is, and how do we, get more people involved in this part of business? Because, like you said, this is where the true generational wealth is built. So how do we get more people in space?
Yeah. Yeah. Well, first, I want to say that, and it's not even just for me personally. My objective now is to help more of our people build high growth companies.
Mm-hmm.
And reason why I say that involves the venture world, but also that involves companies that may not raise capital from VCs, but still are high growth, easily scale companies. And the reason why I say that too, because as the more and more our people, it's like we creating, I think you said earlier, ecosystem. Because if we have more Black and brown founders build consumer product companies, tech companies, whatever, something that can scale fast, even franchising systems. I here in Delaware, I helped 2 people convert their individual business into franchising systems. Now they are the McDonald's folks selling, getting royalties for their things. And so that's still a high growth business because now they're multiple, they become more valuable. But anyway, my point is that I want people to understand, start thinking about this, because now, even if you have an accounting degree, you don't have to go to Bank of America to be an accountant. Not saying that you don't even have to start a business, but you can be an accountant at a Black high growth company. What if you're an accountant at a company that sells product in Walmart, right? And it's Black owned. Like how much better that make you feel as another Black or brown person, that you work for a startup company that's doing maybe $5-10 million a year, is ran by a female that looks like you, and her product is inside Target, her product is inside Walmart, it's inside Amazon, or whatever the case may be. You know what I mean? And so, I guess my point is that expose yourself to the industry, be open, and learn. And there's a lot of places to play in. You can be you can be an employee somewhere, because even employees get equity in companies. People don't. You can get equity in companies. As an employee, you don't even have to start. You can get your salary and equity. But you can be an employee. You can be the founder. You can be an investor. There's a lot of different ways to play in this industry, and so the opportunity is just open. And we haven't even talked about private equity. That's a whole nother conversation. But that's just a place to begin. Looking at Shark Tank.
Not that we want to do a deep dive, but because I see those things used interchangeably at times. Can you explain the difference between venture capital versus private equity?
Yeah, simply put, venture capital is where they invest and get a small percentage of the company. Okay. Typically, private equity is where they buy the whole business. That's, in terms of making it simple, I'll say, without going even deeper, that's it. VCs, we invest a small amount of money into a company and help it grow. Private equity, they go around looking for businesses to buy. Similar to buying, think of private equity like a real estate, a person trying to buy an apartment building.
Mm-hmm.
That's the same thing.
Okay.
They just buying businesses. I mean, they can buy real estate too, but they
I got you.
They own most of America.
Yeah, they do. They're buying. As a matter of fact, right now the private equity firms are who's buying up all the real estate. But here's the question I have. So obviously you can't say yes to every deal that comes across your desk. I mean, and I don't know if you can name a specific company, but what would you say, have you had big misses where for whatever reason you didn't invest and that company just, exploded and you're like, wow, that was a huge miss. Have you had that experience in your career yet?
I'm trying to think about some of the deals that we did. How should I say? Regarding the portfolio that we had, not exactly, but there were some other deals that I was a part of that did, and it was like, crap, I wish I had a little bit of equity. Because some deals I kind of worked on or been a part of for some capacity, but did not have any equity in it. And so there were a couple like that I'm like, oh, that sucks. I don't want to name any names because there's some.
No, I got you.
Yeah.
So you may have helped them along, but just didn't take equity.
And it sucks. To make it plain.
I'm not trying to cause you no trouble. So we can move on from that. All right. So a couple of questions before we get out of here. Along this journey of yours, right? So you're starting as a kid in Delaware. You said you always had the hustle spirit. You stayed in Delaware, went to University of Delaware, but you made those connections along this journey to get you from where you started to where you are now. What would you say is the biggest hurdle or something that you had to overcome?
Yeah, I'll say one thing is this. I didn't know there was a label for it. This imposter syndrome thing.
Mm,
And because a lot of my hurdles was mental because I grew up kind of differently. I didn't really get support from my journey on my path, but I kind of had to walk this path on my own. So my immediate influence, referring to my family, I love them dearly, but they didn't see what was in my head, and they didn't really necessarily support my vision for my life the way I would prefer. And so then when I start making some headway and some traction, I think I suffered because I didn't have that pedigree, such as Harvard or the MBA. And even though I had the experience, sometimes feel like, oh, I'm not supposed to be here, kind of feeling.
got you.
And so as a result of that, I probably missed out on opportunities as a result of that. You know what I mean? I mean, now I'm much better now. I mean, I probably still suffer from here and there, but and my wife said this to me is that you need to have a confidence equivalent to an average white man, you know, and that's because
Of course, it's interesting. At least the audacity.
yeah. At least the audacity, because there's a situation where I have another company too that I'm working on. Trying to build a eHarmony for buying and selling businesses. So think of biz buy sell.
Yeah, I'm about to ask you.
For,
So similar to that.
yeah. So something like that, but a chance to build relationships to get more meaningful deals done. But anyway, and so I've been exploring more of the private equity. So how are we pivot from another direction? We were trying to do fractional franchise investing to allow people to invest small amounts into franchises. And so what happened is that we pivoted around that because there was a lot of regulation. And I'm bootstrapping and all this and that, but there was another guy who came up out of nowhere to mirror what we were doing, which is fine. I expect competition. I have no issue with that. I don't even have an issue with him. What I have the issue is that, when I start talking to some investors and they was like, oh, you got to get a deal done first, which honestly is the right answer. You know what I mean? Because they want to prove out that you can find a deal and get people to put money into it and do it, because that's a solid question to ask, right?
Yeah.
But then I know another guy who didn't do any of that, is a different persuasion than I am, who raised over $1 million something, for really a website and a sign up list.
Man,
And that kind of floored me a little bit. Not with him, because I'm all like, get your money, right?
Yeah.
But it was like I'm questioning the investors. I'm like, what happened to the typical protocol of investing? Number one, you know what I mean? And so, because I know I have more credentials than he does. And so my point is saying all that is that example of the apostleship. I'm like, okay, Pedro, like you gotta like level up and just swing for the fences. I'm not saying that I don't, but you got to get rid of that syndrome thing. You know what I mean? Because you gotta, because in that scenario, it's like, dude, how did he do that off of just a website when I'm have way more advanced than he is?
It's interesting, right?
Struggling with that.
And shout out to Troy and Rashada Earn Your Leisure. They're good brothers. They've been on our pod before too. But I was watching their most recent episode. They had Isaac Hayes III on, who built Fanbase. And something that he said on here, he kind of said exactly what you said, but a different way. He said that when he built that business, he had to actually spend 6 figures to have the app built before he could even approach investors. And he said that he knew white folks that would write something on a napkin and go get funding without having anything. He said they would literally just write a thought on a napkin and get funding when he had to actually build something first. So he said that that's still the playing field in that space where we kind of gotta go a little bit harder or further to get the same kind of results.
And the thing is, he did it. And to your point, that's what you're supposed to do. You're supposed to self-fund and get the thing. That's what you're supposed to. He did everything correct. You know. But I get it. I definitely get it. But short answer is that was my hang up. And then I think being okay being wrong. You know what I mean? Because I think we grow up in a school system that says you got to be right all the time. And it's almost like an embarrassment being wrong. And I was like, it's okay to make mistakes and be wrong with it.
Absolutely.
You know what I mean? Everything's a learning process. So I'll say those two things.
Absolutely. That's a gem right there.
Yeah, right.
So Corey, you have any questions you want to ask the brother?
I do. I have a couple questions. One, when you were, in college and you were building these relationships, and then you moved into the business world with those relationships. How did that affect your family life?
In terms of like, did it in terms of quality time and all that type of
Yeah,
stuff?
yeah. Like how much,
Yeah.
like
So
the time commitment for it.
yeah, yeah. I'm still paying for that today with my wife. Yeah. So here's a little quick 2 second story. So I worked a lot. That's just how I am. That's just so my wife thought like when we were dating that was going to change. So tip ladies, where what you see is what you get with the man. All right, what you see, what you get. She saw me working a lot, and she thought that was going to change when we got married. The reality is, it did not change. You know what I mean? I was still working, and I do have some regrets. There's times I probably could have held back, and especially sometimes I have this ill will a little bit because some of those earlier projects didn't work out the way I wanted to, and it was like, man, I could have spent more time. But so now I'm kind of making that up. But there was that tension in the beginning because did not really spend that amount of quality time in those earlier stages, and so there was that tension, and then now some years later, and have a son. That, by the way, I don't know if you guys know this, my son went viral back in fall of 2019. So is that delicate balance of that managing that even still today, so I don't know the answer to solution to that, but it's still a struggle. It's still a struggle.
And
Yeah.
the,
Go ahead,
the
Corey.
second question I have is, when you're in these boardrooms or when people bring deals to you and you're looking over a deal, what's the number one thing that will make you automatically just put it in the circular? Like if you just see it, like that's never gonna work. What's the number one thing that you just dismiss it?
Good
Not
question. Oh, go ahead.
like no,
I didn't hear the last
not
part.
not the number one thing that'll make you draw to it, but a draw away. Like, yeah, I'm never doing that.
Well, it may not be happen right away, but dishonesty in something, it can really turn me off. Meaning that, so let's just say you're telling me in a conversation that you're doing 100 grand in revenue or something like that, 500 grand in revenue, whatever it is. And then I say, okay, cool, because I'm the type of guy, I'm gonna take your word, right? And you're innocent until proven guilty. But then when I pull everything back, you don't have that. Then I'm like, okay, well then what else you lying about? Can I trust you even later on? And so, I would say dishonesty, and I'm pretty flexible because I know a lot of times early stage companies they don't always have everything together. But I would say that oh well, someone else did pop in. So dishonesty in terms of communicating to me, because if something, here's another tip for anybody listening: if something isn't great, it's okay to say it isn't great. Allow that investor to digest that. He or she still may move forward with it because they may know how to fix it.
Yeah.
The worst thing you could do is act like that thing don't work. So be honest. The other thing is a lot of fluff, meaning like buzzword people. So you all you do is telling me that so like for example like crypto, web 3.0. If that's your whole conversation and you're not solving like a real problem, I'm gonna be I'm not gonna
See
consider
that
you
a lot.
serious. Yeah. Because you can read through that because because not to say that those industries are not a valid industry, but my take on that is that you're just a person and trying to win over on a hot ticket. You're not
Yeah.
really solving a real problem for somebody. You're just trying to win somebody over on something that's hot and trendy. Because once that's not hot and trendy anymore, you're gonna
You
move
gonna
on
be
to the
on to
next
the
hot trendy
yeah.
thing.
Yep.
Okay.
So yeah, I'll say those two things.
All right. So, Corey, anything else you want to ask?
No, that's it. You know what I mean?
So,
Like,
since we
go
got a
ahead.
couple more, we can get out of here. I just want to ask you, what is your? Because you mentioned earlier about having to study and read books when you are making this transition into venture capital. So it doesn't have to be any book in venture capital, but what would you say is your favorite book or book that's inspired you along your journey? It could be a book or a couple.
Yeah, I there's 3 books. They're not really venture books, but these are just books that my brain reflects to a lot throughout my
Okay.
life. So the one is probably the most famous one everyone knows is the Rich Dad Poor Dad.
Mm-hmm.
That's the one. There's another one. Why should all the white guys have all the fun?
Yep.
That speaks to
Reginald Lewis.
John Blake. Yeah. Private equity and buying businesses. Another book is called read this a long time ago, and 22 Immutable Laws of Marketing.
Yep.
And this is a marketing book that I read years ago. And the one thing out of that book that makes me keep reflecting on it is always trying to carve a niche, being that first in something that kind of gives you that first hand advantage of carving that niche, trying to find that angle. So I
Mm-hmm.
would say those three books are the books that I reflect on a lot throughout my life, and in venture, private equity, whatever, starting businesses, whatever it is. Those are books I reflect on.
Okay, that's good stuff right there, man. So, man, this has been a very educational for myself. So I appreciate your time. What is the future hold
No,
for you?
thank you.
Yeah, what's the future hold for you, Pedro? What are some of the things you're looking to do moving forward from here on out?
Yeah. So, high level, I would love to just be able to keep investing in startups and buying businesses, right? But breaking that down a little bit more is that I am trying to work on having my own venture fund. And so eventually I probably talking to like LPs, people might want to invest in that. And I want to focus on investing in Black and brown women-led companies.
Mm-hmm.
But the other thing is too, there's two other things I'm trying to do too, is because and this can be software, it can be consumer products, by the way. I'm trying to figure out also how to help more Black and brown people build consumer product companies and
Mm-hmm.
get them inside stores. So I don't have a solution for that yet. I'm still trying to figure that out because I'm building connections with big box retailers like Costco, Target, and all of them, ShopRites. So I have connections to kind of help people funnel into these places. And so but I need more to see more and more consumer products. And the other thing is, two more things is one, I also figuring out how to see if there's a way to connect celebrities or influencers to get equity in businesses to help these businesses get more exposure. Because that's one thing with these early stage companies, they gotta get reach. And if an influencer or because it happens a lot, I see it a lot. Some people get equity by just doing something. You know what I
Yeah.
mean? And so it is if that's the way to help. And then lastly, going back to my funding fuel company, just building a new marketplace for people to buy and sell cash flow in businesses in an easier way. But sum it up, I just want to invest in early stage startup companies and buy small businesses, help people in any capacity to get that done.
Yeah, and that's the interesting thing about it. Like, so I go on buy biz sell every once in a while just because I think it's interesting. Um, Sometimes coming from a real estate background, I've seen people, drop $50,000, $100,000 on a property. And I think a lot of times when we look at these businesses, we don't recognize that we can own these businesses sometimes even cheaper than
Oh,
that.
absolutely.
So I
Oh,
go and buy
absolutely.
biz sell, and I'm
Absolutely.
looking at franchises selling for 50K, 25K. And I'm like, oh, didn't know you can get into that space for this price. So I think a lot of
And
it is
you,
probably education too. A lot of people probably don't understand just how much money they need to get in certain businesses.
you're right. And that's, I guess, another thing I'm doing. I am trying to do better at building my personal brand because one, I'm tired of seeing a lot of the garbage out there in terms of business tips and all that. A lot of it's garbage, in my opinion. It's not
Yeah.
really helpful for our community. And the other thing is too, if I had a huge following, I'm able to get in more deals even better. I'm able to have conversations with people even better, and I'm able to just make things happen even better. But part of the reason too is about the education piece because you're absolutely right. You know, you can negotiate deals right before in the middle of the pandemic. Me and my friend were about to buy a business. Well, we were in the middle of buying it. We already had it negotiated. Purchase agreement was drafted, and but I was able to get like 75%, 60 to 70% off the asking price they originally had offered, and I got it down to the down payment was equivalent to buying a regular car, like a Toyota car, and that's
Wow.
how much I was able to get them down. And so my point is that and also too, there's other people who be buying business. Like I remember hearing a story of someone bought like a $30 million company for 150 grand. Right. So it's just a matter of access, connections, and learning. Like I have a connector who lends people to buy businesses, but the only difference is you gotta buy business gotta have at least about $2 million in profit annually. So they're like bigger. But when you get in that world, it's a little bit different. They don't even care about credit that much. They
Mm-hmm.
care about the deal itself. And so So anyway, so back to your point. Yeah, I think there's a lot, and I think a lot of us, even if you have like a contracting company, you can buy some company, and you can go from $1 million in revenue for your business to $2 million because you bought another $1 million company. Boom, you consolidated it.
Yeah.
You know, so there's just a lot of learnings that we can do and really like own territory.
Yeah, man. So listen, for the folks out there listening or watching, I'm going to put Pedro's IG and information in excuse me in the description box. Make sure to follow him. And if you have any questions, reach out to him. But see the businesses that he's helping to build, and get the education, because I think that, in my opinion, at least, that's a huge part of it. Because you know, these last couple episodes, I got a huge education. Like, even when it comes to like buying hotels, it's like I always thought of that as being this big thing. Now it seems more attainable. Looking at some of these bigger businesses, it seems more attainable once you have the education and the knowledge. You just said buying a business for the price of a Toyota. Like, most people don't even recognize you can do that. So it's important for us to get that.
And by the way, too, regarding that hotel, sorry to interrupt. I connected a guy that was able to invest as a passive investor in 2 hotels, and I think he only invested probably like $10,000. See, and now he's a partial owner in 2 hotels. You know,
and that's, as a result of that. And that's what I'm saying. But a lot of times we don't recognize that. We think you need millions and millions of dollars to get into some of these deals, and you don't. So that's where the education comes into play. But man, Pedro, I just want to say thank you so much for your time, sharing.
No problem. Thank you, guys.
Yeah, and we want to make sure everybody out there that's listening and watching, please look up Pedro and see what he's got going on, because we need more of us to get this education, man. Corey, you got any last words for the brother?
Again, amazing. Like every time I sit and have one of these conversations with one of the brothers and sisters that come on our podcast, I learn so much. Like, I was like, damn, you could do that? Like, you know what I mean? And I'm, you know, we get deals passed across our plate. We get 10 deals a day passed across our plate. But it's still just looking at, you know, all of the things that people do, and especially something like you do, where you're in a space that not very many of us are in. Like, it's amazing, and I thank you for taking the time to become an expert in a field that we don't have a lot of experts in. So thank you.
Absolutely. No, I appreciate it. And I think this is just a good exposure introduction, because a lot of real estate investors, you can invest in a lot of these things as part of diversifying your portfolio. You know? Mm-hmm. And so yeah, absolutely. And it's much easier today than it was years ago when I first got started.
Okay, yeah. So we'll definitely be in touch. Just want to say thank you again to our audience out there. You know, make sure you check out Pedro. And thank you guys for all the support that you give us. But as we always say, it's not about how much money you make, it's about how much you keep. Game elevates. We'll see you guys on the next episode. We appreciate y'all. Peace.